scan this. Sovi is here. Let's level up. Stocks can trick you fast, but this one is easy if you lock onto what a stock actually is, and we'll solve it quickly together. Start with the core definition. A stock is a share of ownership in a business, so when you buy one, you are buying equity, not a guaranteed payment or bank money. That knocks out fixed interest because that sounds like debt, such as a bond. And it also knocks out government issuance because companies, not governments, commonly issue stock. One more check. Stocks are financial assets, but they are not M2 and not more liquid than savings accounts. So the equity description wins. Well done! Option D. Scan now, watch signs, avoid rush. Trust given ideas and check each step so ownership, not interest, points you straight there.